Joining me live is HSBC's Global Head of Currency Strategy, David Bloom. Mr. Bloom, welcome.
Thank you.
You are more optimistic than most of your peers. Why is that?
Why? Because I haven't changed my forecast to follow the market like a lot of the other strategists have. In other words, they were forecasting 150 at the beginning of the year and have turned tail. And the point is that the structural issues facing Europe are no different anywhere else. And in fact, the US is talking about a new fiscal package, believe it or not. I think that's quite bizarre, where everyone else has to tighten their belts and the US fiscal situation is what it is. The US is talking about spending more money. If the market wants to buy dollars because of that, let them. But it's just wrong, and eventually the dollar will come under pressure.
When do you think that that might happen? Because at the moment there does seem to be a kind of blinkered approach to the size of the US deficit.
Yeah, I mean, I think we're coming up to midterm election in November, new fiscal package, a bit of bashing of different countries because it's everyone else's fault that the US economy is not recovering. And I think the whole situation could get a little nasty and work against the dollar. And then everyone will say, oh, look at all these structural problems. We knew they would happen. Now let's all change our forecasts. So I'm trying to be forward-looking and predictive. And I know I'm standing on my own in a lonely corner.
You're not quite on your own, but I agree, it's pretty lonely in that corner. 135, when do you think that might happen?
Well, we're calling it by the end of the year that actually there'll be a turnaround in sentiment, that this idea that the dollar is a perfect safe haven and what you need to do is buy treasuries and you're protected by the dollar.
Yes.
I think people will realize that this isn't the correct strategy to have. So I'm not euro-loving. I just think the market will turn against the dollar as the year progresses.
Now, where else should we be looking? What about the yen? It seems that since the latest Prime Minister was elected, there has been an awful lot of interest in the yen.
There is, but they've got to, if I'm worried about budget deficits and Japan's got a debt-to-GDP ratio of 200%, I don't think one should be advising people to go into yen. And it looks like the Swiss franc is the new yen, that the market has bought Swissy rather than yen, and I think that's the correct decision. So Swiss franc looks fantastic, Norway looks fantastic, and the market will start lapping up ever more quantities of gold.
And what about sterling? It seems to recover slightly after the austerity measures were introduced in the new budget.
I wouldn't say the austerity measures have been introduced. The austerity measures have been spoken about. There's a slight difference there. But the market likes what it's hearing at the moment. It's making all the right noises. And this is the difference. But one thing I would like to add is that a lot of people think if you weren't in the euro, you know, everything would be all right, your currency would devalue. Well, here is a country where the currency devalued by 20%. We've done 200 billion of quantitative easing, and we're still having the toughest fiscal package that's ever put on earth, practically. So this idea that whether you're in the euro, out of the euro, there's some magic solutions, there aren't any. And for the moment, the pound gets my vote of confidence, and we're pretty bullish. We've got sterling going up to 160 against the dollar by year end.
OK, well, let's look at the G20. There's been a lot of talk about the differences that we're going to see emerging as Obama and the European nations come to it from different perspectives. Do you see it making and having any impact on what happens in currencies?
Well, at the moment, people are saying no. They're not that worried about the G20. But obviously, there's always that risk, which we saw after Dubai, that something dramatic happens. And nobody's looking for them. But you face that risk over this weekend. So people generally take off risk ahead of the G20 in case it's one of the, 1 in 10 or 20 G8s, G20s where something dramatic happens. But the US is saying, well, let's have more fiscal packages. And Europe's saying, no, we can't have such things. And the UK, the same thing. And Europe said they had a sleeping pill. The strong euro and strong government debt markets meant they didn't realize that they had to have such stringent budget constraints. I would say the same thing about the US. They've got that sleeping pill now. They don't realize it because the dollar's strong, their bond market is strong, and they think they can continue to spend money. It just ain't so.
HSBC's David Bloom, thank you very much indeed.